Hello, how do you analyze your chart for swing trading of large cap stocks? We are going to pick 3 stocks from our watch list and we are going to analyze them using maximum daily chart to do that. So the first one we are going to analyze is CBRE. So CBRE is going up, reached a new high a while ago, not too long ago, and still going high. Is far from where we like to buy. The next one is CL, and CL is an example. I put a note there that to remove, so it's just to show you that there is an example. You can have your watch list, and as you analyze it, if some stocks don't, the chart you don't now understand it well, or it does not work well with the strategy you are using, you can flag that stocks so that at the end of the year you can take it out of your watch list and replace it with another one if you choose to do so. So CL is an example of that. At some point I put a note there that I'm going to remove it from the watch list. Right now is going down, but the reason why I like to remove it from the watch list is just with the strategy that I'm using, I just don't feel like it's well designed for it. It's more like if you have horizontal support line, it might work well for it. Maybe I purchased in 2024 using short uptrend swing trading strategy, and those arrows, the one at the bottom pointing up shows where we bought them, and the arrows on top pointing down shows where we sold them. And we traded on the upside of the mountain, and this year we purchased it again maybe in March, and then we sold it in June, which is a good thing. It pulled back a little bit, went up, and then pulled back, so it's still going down. So you can see that it was going down, but it didn't reach the valley line with our swing trading strategy that we use. We first pull the maximum monthly chart to see multiple years in front of us to see the pattern of the chart, and we trace support line, uptrending line touching some lows, going to the present, and we might trace multiples, and then we'll pick few that we notice that they've stock pulled back to multiple times or few times over the years, that we will decide that is the value, that when the chart touch base with it and start going up, we will buy after it reach few higher lows. So with CL though, I noticed that it just does not really follow that strategy, in the sense that when it went up and pulled back, I was waiting to find it somewhere along here, but I noticed that it pulled back to rise at the used previous peak as a support line and start going up from there. So he went up and pulled back again, and we purchased some. So it went up, pulled back like that, and then we sold it. But then it continued and then continue going down. So there is a chance it will go down there before it will do this huge mountain again. But I just feel like I didn't like that pattern for to go with the strategy we are buying. So we pretty much buy at the valley and sell it at the peak. So those are our entry point and our exit point. So and when the this a stock is now really giving us a pattern that align with that strategy, I try to flag it, if that makes sense. So unless I can understand the pattern and customize the strategy for it, I just prefer to remove that stocks to see if I can find another one to add it and analyze it over the years, during the year again, to see if the pattern work well with the strategy we are using. Because you cannot really change the stock chart, but you can change your strategy. So the goal is to be able to customize your strategy, your swing trading strategy, to align you with the stocks you want to swing trade. So you'll take stocks out of your watch list, you'll add some to your watch list until you curate your watch list to a certain number of stocks that work well with the strategy you are using. That way you are not going to keep searching for stocks to trade. You already have your list. You'll have your master list and you'll have your short list, and you can just use those to do your trading. Especially if you have a full-time job like I do, and you have other obligations, a homeowner, like a household, you are the head of the household, or you have, people depending on you, you have other obligations, you may not have a lot of time investing or trading. Therefore, trying to simplify certain things, make it a little more sustainable. And I've just found that having a curated watch list to just trade from is what I like to do, and that's what I'm sharing with you. It's not the only way or the best way, it's just one way in my opinion. So and I used a list in 2024 and I'm using a different list in 2025. Again, just pulling things out and carrying some over when they work well with your strategy. So CL is going to leave the list for now, but yeah, and it seems to be going down at the moment. So the last one we'll analyze is CMG, and CMG is highlighted here because we purchased it already, and I have it in red because there is a chance I might purchase more. So, and the list just show the stocks we'll analyze on a daily basis, or I want to analyze on a daily basis, even though I'm not doing it. And when one is purchased, I'll just highlight it. That way I know that that one is purchased already. Unless I want to purchase it again, I'm not going to buy it in error. So CMG again right now is pretty much close to this valley line, and it does not give us any indication that it start going up yet. It seems like it's still going down. So it's going down to touch base with it. So, and I tend to actually analyze the chart from far right there. So we have this purple line here that is the valley of the mountain that we like to buy at when it start going up. And you can see that it touched base with it and climbed this mountain. We purchased it, a few times. We purchased it there and sold it there, and then it pulled back. So for some reason I thought it's going to use this as a support line and start going up, but clearly it seems like this line is the upside of the mountain. And not quite, but it seems to be making a huge mountain. Like right now, from here it went up and pulled back, so you can see that it's a wide mountain. So it's spread out like 2 years. Time frame, the years are at the bottom. So from 2023 to 2025. So when it touched base with this valley line, so we bought it there and then it keep pulling back on us. So if it start going up from here, we might buy some more. By doing so though, it tend to lower our unit cost when it take you combine all both costs together. Although by doing that, I tend to wait until the price is higher up from higher than both essences that I purchase, areas that I purchase at, before I sell it. Otherwise, I will make a loss on this one while I make a profit on the one that I buy around this area. So it's not just about buying it right when it touch base with that line, but when it touch base with that line, maybe go underneath it or not quite touching it and start going up, making a higher lows, an indication that maybe it's done going down and start going up. We might buy some more share, and that was the reason why I mark it red there, so that there is a chance I might buy some more. Whether I'll buy it or not is another story. But yeah, those are the three stocks that we are going to analyze today. So thank you so much for your time. We thank you very much for watching our videos. We thank you for all your comments, and we thank you very much, you all that subscribe to our channel. I'm Afiavi Liberman, Chorus of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. You just start small and go from there. You buy one share of a stocks using the strategy you want to use to trade or swing trade, and then you just customize your strategy as you are experiencing what is going on with the stocks you purchase that are in your portfolio. So purchasing one share of a stock allows you to stretch your investment amount capital to buy multiple stocks on your watch list, to see which one are working well with your strategy and which one which ones that are not working well with your strategy. And the goal will just be to target maybe $1 profit. If you are buying one share of a stock, just $1 a profit minimum after you pay all the fee. But again, it will depend on the broker you are using. If they charge you a flat fee that is high enough that one share of a stock may not allow you to pay that fee and have a profit, you'll take that into consideration as well. In this sense, I'm using Charles Schwab and Thinkorswim platform came with that is free through Charles Schwab because they own it now, and they charge few cents per trade if you do not hold on to the trade for a long period of time, like for some months or a year or so. So a few cents. So that is that. But before, some years ago, they have a flat fee, and with those flat fee, my husband and I, when we purchase stocks, we'll try to purchase a certain number of shares that when we sell it, we'll be able to have enough to pay to cover the fee we paid to buy the stocks and the fee we will pay to sell the stock, because they'll charge that same flat fee to buy and to sell. And I don't recall how much it was, maybe $7.99, $4.99, $5.99, I'm not sure, $6.99, I'm not sure. It was some years ago, until they made it free now. And then if you are investing, they are not charging whether you buy or sell. But when you are trading like this, swing trading, they won't charge when you buy, but they will charge when you sell, and they will charge some cents. So for multiple share that you purchase or one share you purchase, so it'll be like a penny, 2 pennies, 3 pennies, it depends. of the stocks you purchase as well, and I don't know much of their rules these days, but yeah, so you have to take that into consideration. But everything being equal, assuming that you are using a broker that is not charging you a lot of fee or a flat fee, a flat fee to buy and sell or things like that, the fee is minimum. Yeah, you can target $1 profit after you pay the fee. If one share of the stocks that you purchase can allow you that, or even that's just 50 cents or few cents profit after you pay all the fee, the goal is to make some profit. And once you know that stocks with that strategy you are using, you can make $1 profit with it. You know that to make $2 profit, you just need to buy 2 shares. Does that make sense? You know that your strategy is working. The stocks you are trading with it is working with that strategy. Therefore, to scale your profit, to increase your profit, you just increase the amount you invest in that stock. You buy more share to multiply the profit and go from there. At least that is the strategy that I'm using, and that's what I'm sharing as well. But just keep in mind that it is not the only way or the best way out there. You just have to find the one that works with you, with your risk tolerance, your personality type, your availabilities, or the time you have available to spend on it. But if you are working, it's very important though that you trying to evaluate how much you are making, to allocate enough for your need, your household need, save some for irregular expenses that you do not pay for on a daily basis, but you are on a monthly basis, but you pay for a few times a year. It could be a car registration fee, things like that. And then if you have debts that you are paying toward, allocate some after the minimum payment will be included in your need, but allocate some to pay extra toward your debts, and then allocate some to invest or to trade with. And again, it'll depend on your age as well, where you are in life, and the different obligations that you have as well, or the different goals that you have, that you'll have to evaluate, even your personality, to see if you want to pay off debt first before you start investing in stocks or trading stocks, or if you want to do both by paying debt a little by little, paying extra toward debt a little by little, and investing or trading at the same time. If you are mature person, like older in age, you might want to try to do both, in the sense that investment or trading takes time. Investment takes time for the money to grow. Therefore, starting early matters. Therefore, if you are not a younger person, you are closer. You are getting closer to when you want to retire. Does that make sense? You'll want it to maybe do both. Allocate your resources to both debts and investment, so that you can do a little by little. Or you might decide that because you have a high focus level, because it's an ability as well, then you prefer to do something first, be done with it, and do something, and then you decide maybe to invest first, pay off debt later, or pay debt off first and then invest. So you just have to see what works for you. But just keep in mind that every single decision you make, there will be repercussion to it. So something a good or a bad or both. So, and because you might just have to let certain things go as well. So for instance, if you wanted to invest and pay off debt at the same time, you are dividing your your income after allocating some for in your need, your monthly regular expenses and your irregular expenses. What you have left, you are spreading it. Therefore, it will take a little more time to reach that goal of having a good investment fund in your account, because you are paying off debt at the same time. And when you are doing both, debt you are paying off might take longer for you to pay them off as well, because you are not putting all your money toward that area either. Does that make sense? So you have to deal with that and not getting frustrated or discouraged that those things are not going fast the way you want them. But if you choose to pay off debt though, it might be good to spend a little money to swing trade or to invest. That way you are practicing the strategy you want to use just with few dollars or $100. That way, by the time you are done with debt and you want to invest, you master the strategy you want to use. You have time to customize it to your liking to meet who you are, and then you have a list of stocks that you familiarize yourself with, because you analyze their stocks for so long that you are comfortable spending more, buying more share of them. Does that make sense? That is the strategy my husband and I we use. I tend to work toward debt and invest at the same time. But after a while, we decided that, well, to be able to live on one income, we will need to have debts, because having debt makes it hard for us to be able to have all our expenses under one income. Because my goal was to be able to have our expenses below one of our income. We both work full time, and to be able to have all our expenses under one income, debt needs to leave. Debt needs to be paid off. So, and then against, I think my husband is more like to do one thing first and do one, be done with it before doing something else. But I'm more of a generalist. I can do multiple things at the same time. So I didn't really want to go that approach, but I think it was the best approach for us. But it was some years ago, and at that time our children were young, and I'm giving you those examples to put things in context for you. Our children were young, so that means there was some stuff that we didn't have to worry about. Does that make sense? And again, we didn't pay daycare. So if you are paying daycare, that's another expenses you have to worry about. We didn't pay daycare. We have jobs that we work it out to have complementary hours, if that makes sense. So when I'm working, he's available with the kids, and when I'm back from working, he goes to work. So we work like that, and that allow us not to pay for daycare, and at all time one of us is with the kids. So not having that expense allow us to just focus on paying off debt. So we live within one income, and we use the other. We live within the highest income, and we use the lowest income to pay minimums toward all the debts, and then allocate the rest toward one debt and pay off. So we started with the credit cards, and when they were paid off, we moved to, my husband tend to roll some credit card to low balance credit cards. When they give those off at times to times, I didn't do that much with my card. I have two with debt on it, and my debt was smaller, but I think I did a little bit, but then I stopped doing it because I just want to pay them off. So, but he used that strategy. But after we're done with the credit card, then we moved to his student loan, we pay it off, and then we moved to the car loan, and we pay that off as well. So, and then when we are done with it, because as we are living on the highest income, we are paying mortgage there as well, and we are paying a little bit extra toward it. So when we're done paying off the debts, we move our budget to live on the smallest income of the two, and we use the highest income toward the mortgage to pay the minimum and to pay extra toward it. And while we are doing all of that though, we decided that the allowances that we give each other, $100 a month, we will use that to invest if we are able to save it. So every few months we'll probably we save from those allowances in our Roth IRA. I open one for myself and one for my husband, and then we will look for stocks on Trust Swap, and we use their filters to find stocks that reach the low, and we will use those stocks. We will buy some, again taking into consideration the fluffy we are going to pay to buy and the fluffy we are going to pay to sell. We'll buy those stocks when they reach their 52 weeks low, and we'll sell when they reach their 52 weeks high. Was the strategy we use. And we are trading penny stocks because we just have few $100 to work with. Because those allowances are what we use to keep our budget simple for me to manage. Those allowances are things we can spend our money on without telling the other, and we take cash out and we can spend that on our clothing, undergarments, and cosmetic product or things like that, you know. That way I don't have to keep tracking those things. So that way we just have bills, utility bills, and mortgage and groceries. Just have those big things, and you know, allowances we give ourselves, we can use that to eat at work if we want. We don't want to take food to work, although I took food to work. But yeah, it just makes things simple, not having $1, $2 transaction going through their account because somebody bought something here and there and things like that. But that was the strategy we used. And while we are trying to pay off debts by just saving some of our allowances, when they reach a certain dollar amount, we send it to the account, and then we trade with it. It allows us to practice investing / trading, and you know, and pretty much learn about stocks, investing, and all those, because I did a lot of reading on it. I was the one teaching my husband those things, and then he's more risk type of person, being orange personality, so he liked to trade more and I like to invest more. So but we'll bounce ideas around each other, and we are able to, pretty much it allows me to be comfortable with the stock market. Does that make sense? So now by the time we pay off those debts, and we can pull more money toward the stock market, we are able to do it. So, and yeah, so that's just a food for thought, that even if you choose to pay off debt first, it's good to allocate just a little bit toward trading, swing trading, investing, whichever option you want to do. While as you are doing a lot of reading toward the topic, you can start practicing while you are learning. That way you can pretty much have a practice that you can draw experience from. I know there is paper trading or things like that out there. I never done it, and even when I teach my kids to trade stocks, I didn't teach them to paper trade either. We do that with real money. I just told them not to spend more than $300 per trade and go from there. So, but yeah, but that, maybe because that's the way I did it, that's why I'm sharing that. But just so there is a way to paper trade without using real money as well, but I don't have experience with it. So thank you so much. If you are interested on other videos related to investing and trading, will you please check the link in the video description. Thank you.